Investing year 2025 is just beginning for us. The famed SP 500 index notched up more than 23% growth last year. So far this year, the index is slightly in the red, and some stocks in it are experiencing significant declines. And these are exactly the top 5 cheap and quality stocks for 2025 we will be talking about. There is nothing better when, as an investor who has 5 or more years of investing ahead of you, and you are dropping quality companies to buy. Some of the stocks we're going to talk about I already have in my portfolio myself, and some I'm still waiting for, we'll say. Let's take a look together at the top 5 quality companies by 2025. I guess the last one will surprise you. Welcome to the next investment video. We'll start off lightly with a stock that I've had in my portfolio for a few years myself, and which I'm definitely not looking to sell now anytime soon, even though I'm up about 153% on it. And that's Amazon with the ticker AMZN.A. Amazon has had a beautiful last year. The stock has gained more than 40%. And I personally think this company is well positioned at today's prices for this year and years to come. When we look at the free cash flow numbers, or free cash flow, which is a very important metric for us investors. So I think it's possible that Amazon will have free cash flow in excess of $50 billion this quarter. If we look at their earnings, so Amazon finally became beautifully profitable in 2024. Their profits literally exploded in 2024. Everything is playing into Amazon's hands this year. The job market is strong in the U.S., people have jobs, and Amazon is riding that wave as one of the largest employers. People are happy, and when people are happy, they buy stuff, and Amazon just happens to be the biggest place in the world to buy stuff. AI and automation. Thousands of robots for Amazon are working in warehouses. Amazon Prime Video is right behind Netflix in second place. Amazon has huge potential where it can be profitable. My prediction, I think this company could easily go to $255 this year, which is roughly a 20% increase from today's prices. But you always have to factor in the unforeseen event in investing too and send the markets down. As a second company for 2025, I have Porsche with ticker P911. The share price has been decimated over the past year by problems in the European auto industry. We see negative news and deterioration in the future outlook regularly with Volkswagen, not just the group, but other brands as well. To this, we can add the pressure of competition from China and the tariffs that Donald Trump's administration may impose on the EU. Apart from Ferrari, which is a story in itself, we can see more or less problems with all European car companies. Personally, after my analysis and the analysis I have read from other investors and analysts, I believe that this negative segment in the automotive sector has punished Porsche too much, and the sentiment here is unnecessarily negative. Ironically, Porsche is not showing such a catastrophic performance when we compare the whole situation with its competitors. Moreover, the company pays a dividend of over 3.5%, which I believe is sustainable. I myself have really analyzed Porsche a lot now. I gave it the time, looked at the numbers, and added it to my portfolio. Why I did so, at what price, and why I personally think Porsche will see dramatic growth in this, and the next few years I've broken down in the Patreon community. You also have target prices within 3 years there. Check it out. The link to the Patreon community is in the video caption. As another company here, we have Booking Holdings, with a ticker underneath that you can find it on your BKNG app, which has gained about 36% in share price over the last 12 months. Booking Holdings is a global company focused on online travel bookings. It operates platforms like Booking.com HA. I would like this stock, but at a price of $4,600 apiece, so I'm putting a bell in my Monero for a price alert. For me, Booking is a better investment today than their closest competitor, which is Airbnb. Booking is a free cash flow generating machine. Except for the COVID year when everything was closed, they are back in much higher in terms of revenue and free flow. This company is extremely investor-friendly and has really been buying back stock from the stock market year after year for over 10 years, so it increases value for shareholders in the building. For me, this is a very high-quality investor firm and a money machine. I set my own bell on the price at $4,600 per share, which isn't that far off. We all want to know what will be in the stock markets in 2025. And since the investment app XTB that I have a long-term relationship with has pro analysts, they have put together a free PDF for you on how to move the stock and other markets in 2025. Just enter your email and it will come to your email for free. The link is below the video. As the fourth company for 2025 in the stock picker, I have ASML, which I've talked about here and which I have in my portfolio myself at XTB. ASML is a critical company for chip makers and for companies like NVIDIA or AMD that make chips. This European company, in short, makes the machines that then make the chips. It is virtually the only company that makes these machines. So they have a huge competitive advantage and pricing power where they dictate how much their products, in this case mainly machines, are going to cost. The share price has now fallen because ASML has lowered the outlook for how much money they will make in 2025. However, they have a revenue plan through to 2030, where at the end of 2030, projected revenues have stayed the same. So, long-term, nothing changes, and that is why, for example, I've been buying ASML into my portfolio. ASML has a pretty bouncy free TAAs flow, which I personally don't like much, but if we zoom out, we can see that they are growing long-term. For me, ASML is one of the really few big undervalued companies in today's stock market, and that's also why I've included it in my portfolio and intend to buy in any downturns. Most investors get bored when their stock is underperforming for, say, a year. I personally can see through these short-term things and want to hold the stock for the next 5 to 6 years at least. I personally, according to my analysis, put my target price from today's levels to $1,100 in 3 to 5 years, which is more than 50% increase. Oh, and the fifth company is a company I would love to buy this year, but honestly, I am still waiting for better prices because it is a very high-quality company, and that is SP Global with SPGI ticker. S&P Global is a global financial information, analysis, and ratings company. It is known for its ratings, data services, and indexes like the S&P 500 that help investors and businesses make informed decisions. At Portfolio Tracker, I put a bell on it at $460 as my purchase price. Looking further, the share price is up about 12% in the last 12 months. SPGI is one of those very high-quality companies that makes money in really any weather. It's a well-diversified biz that makes the most money today on basically processing data and selling it to other companies. As you can probably guess, since you are basically selling air, there are not a lot of costs in this type of business. As I mentioned, valuation is not exactly cheap, I admit today. It is rather fairly priced. I personally would like it cheaper at a price of $460 per KUs a share. However, I still have to say that the company is now trading at a buoyant PE of around 25, which is less than the SP 500 index average, so it is still cheaper than the SP 500 even at today's prices. In general, it is one of the most reliable companies in the market also, which is why I would want it in my portfolio in the future. I have a little pearl for you at the end. A friend sent me this actively managed fund about a week ago and its performance over the last 6 years. I, of course, know what kind of fund it is, but because I honestly don't want to hurt anyone, I won't disclose it. As you can see, this fund has approximately 6 years' performance of less than 1%, and mind you, that is not including management fees. So investors are realistically in the red. Anyway, you who would like to have a higher appreciation than 1% in 6 years and would like to learn how to invest and let your money work for you even when you may be sleeping, join the over 6,000 profitable active investors in my community and check out these specific videos to help you. Oh, and if you're wondering how you can get rich in 6 months in 2025, check out this video.